What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting method and the trading method that we use can be implemented with any company that's publicly traded in the US stock market. So make sure you hit that like button if you enjoy this video. It really helps the channel grow. Thanks to all those who continue to tune in and leaving comments and like our interaction that we've been having in the last few weeks especially. But if you haven't already, make sure you hit that subscribe button, the notification bell as well. That way you are alerted when we release new videos. We do release bonus content from time to time, but the nightly and weekend videos, like tonight's video, we focus on identifying triggers and targets for trades ranging from, intraday scalps and short-term plays to long-term swings and leaps as well. So if you want a deeper dive into exactly how we set up our chart, make sure you check out that bonus content that we talked about. There's a couple of videos that dive deeper into that for you. If you want a quick reference, a free quick reference guide for the strat, which is the base of our trading method, make sure you check out the description of this video. There's a link to a free PDF for you there. So while I do, or we do, go over the triggers and targets for the next day, the week, month, quarter, and year, make sure to stay with us through the whole video. That way you get the all time frames, basically, not just looking for tomorrow and this week. We give some pretty good insight on all time frames. So let's go ahead and get into the agenda. We're going to go ahead and recap the price action from Monday, January 5th. Then we'll zoom out like we normally do, take a look at the week, month, quarter, and year, and then we'll set the 4-hour markers and triggers and targets. Zoom back in on tomorrow, set those targets for tomorrow, and then we'll review the triggers and targets for the week, month, quarter, and year as well. So in just looking at today's price action, we go to the 5-minute first like we always do. This is where we are able to take advantage of the proven and repeatable strategy that we mentioned. Basically, the main objective is identifying the opening print of the first traded price of the day and looking for either higher lows above that opening print, or lower highs below that opening print. If you get higher lows above the opening print, you want to look to get into calls targeting overnight high, previous high of day. And if you get the price action to the downside and you get that lower high below opening print, then you want to look to get into puts targeting overnight low and previous low of day. Now, with today's price action, we had the gap up. So previous high of day was already taken out of the picture as far as a target to the upside. Basically overnight high as well, because we opened right at the overnight high. Sometimes we can still gap up, but a ways down from the overnight high, somewhere in the middle of the overnight range. But today was one of those where we had the opening print and the overnight high basically at the same level. So it was just a matter of resolving the opening print / overnight high level. If we were able to push above it, then obviously we had our targets that we had set Monday, and we were basically there, right? The gap up got us to that 50.76, last year's high. It bumped us up over that 50.09, which is last month's high, locking in. I'm sorry, we didn't lock in November as a lower high at that point. That just made it 2 up on the month. But then we did go above last year's high, which then locked in November as a higher low on the monthly time frame. We'll get into that in a second. But I'm kind of digressing from the proven and repeatable strategy that we use at the beginning of the day and on scalping, right? Not necessarily just scalping, but either early entries on trending days as well, right? So we can see here, we've got the opening print up here at 50.35. Previous high day is down here, right? So that's the gap up. We've got last month's high right here, 50.09. 50.76 is last year's high. And then we've got this weekly downtrend line coming through here. We are zoomed in quite a bit, so it does look like a horizontal line, but it does slant slightly from upper left to lower right, and is a downtrend line, right? So we have a weekly broadening formation here in this light blue, and the sorry, did I say weekly? This is 15-minute broadening, and this is the 1-hour broadening formation here. So not only are we gapping up, but we're above the broadening formation. So it would be reasonable to think that we would get some corrective activity or some price action to pull us down at least a little bit to test the support levels or test the resilience of the bulls, right? Are we just going to have all the overnight buyers selling off, taking profit? People who swung from Friday, because Friday was a good day as well. We gapped up on Friday morning. So we've got those folks that are already in contracts that are probably looking to take profit around these levels, which are resistance levels on the way up, right? Again, last year's high, last month's high in this weekly downtrend line. So along with these broadening formations. So we did push up from the opening print in the first 5-minute candle, but then we pulled back down below it and we got the lower high, and it would be perfectly reasonable for you to have entered puts at this when this candle right here went below this lower high, the 2 up went below that low, that would be your entry. Now we did get a lower low followed by we could call it a lower high just because of this bullish engulfing candle, but I wouldn't really call it that. So we did get the lower low, but that then went to a higher high in comparison to this solid lower high. So that basically canceled out that trade, right? You would have taken a loss if you had your stop up here just above the lower high. That's if you're giving it room to breathe. If you if that was just a purely scalp play and you didn't know whether it would pan out or not, you could have had your stop set basically at your entry to break even. We went ahead and entered on this lower high, again taking into account the resistance levels we're running into, gapping up above these broadening formations. So we did take a small loss once price got back up here. But once it did get back up there, you could see how it stalled out on last year's high, right? So there was no real entry here. You could have taken this soft higher low here and scalped that to the upside, but then you'd got this higher low followed by a lower high, which would just off the bat, without even looking at anything else to the right, would just signify consolidation, right? And that's what we got essentially, right? We just consolidated along last year's high and then ultimately broke below, but coming from a lower high. So if you wanted a little bit of risk on the table, you could have looked at, all right, we've got RSI that's way high, at least on the 5-minute. We've been going sideways on last year's high. We've got these broadening formations. It's perfectly reasonable to think that with this lower high here, if we make a lower low instead of like here how we made a higher low and then a lower high followed by a higher low again, if this lower high then breaks this below this lower breaks below this higher low that we had right here, that's our entry, and that's what we did, right? It's right next to opening print. It's slightly more risk on the table because we're not under opening print, but we went ahead and jumped in some puts here. We came down, essentially bounced off of not bounced off of, but got caught up at last month's high, and once we got this lower high again, we added some more puts to the position here. Once we broke below this the low of this lower high candle, and we were able to take it to the downside. Now, when we got this funky candle, that was kind of our signal to get out, right? We got this candle, and the wick was very quick, so we were able to still sell half of our position within the body of the candle. Once we pushed up, we did make a lower high, but we made a higher low. As soon as we broke this above this lower high, we sold another 25% of the position, which is so essentially 75% of the position was gone. We pushed up, but then we did make these 2 back-to-back threes or engulfing candles, and the second one was red. So that usually, if you get 2 engulfing candles, the color of the direction of the second one is generally the direction that you break to. So we did still have 25% of our position here. We did break to the downside, couldn't quite break below low day, which would have triggered the 1 2 up 2 down on the 4-hour candle. So at that point, when we made this higher low, and then higher high, we went ahead and exited the rest of the position there. And that was it for our day trading or scalping positions, right? So just speaking of those higher time frames, it would have also been perfectly reasonable for you to take a call once the price broke above this two down, which was essentially a higher low. Not essentially, it was a higher low, but it also set up this 1 2 down 2 up reversal, which it did trigger. Didn't quite reach magnitude. Again, got hung up on last year's high. So depending on how you looked at it, if you wanted to take this as a higher low, soft higher low, soft lower high, consolidation within the 15. Once you start to break down below this 3, you obviously would have wanted to sell, and that's going below opening print as well. So from the 15-minute, you could have also entered more puts either off of this crazy 3, which I wouldn't have suggested, or this lower high here. You got a little bit of push to the downside, and maybe if you wanted to swing it, obviously, well, not obviously, I personally wouldn't have contracts for this week if I'm going to swing the put, but we'll see how things react overnight. I think the fact that we couldn't close the gap was a sign of strength, obviously, or not obviously, it was a sign of strength in our opinion. So we didn't swing any puts overnight. But we also didn't, jump in calls like, okay, well, we got to go up from here overnight, right? We're just going to wait till tomorrow opens and we'll see where things go. Now, from the 1 hour perspective, we did get this higher low, but is this going to be a lower high here, right? If we go 2 down in that first 4 hour, or if we never break above the high of this candle, the last hour candle of Monday's price action, and then at some point, we could get inside candles and then break, or we could just go 2 down in that first 4 hour. That locks this in as a lower high, and now we're looking at the start of a slight downtrend the start of a downtrend on the 1 hour. But if we look at that 4 hour, it's more than likely so we can get this higher low set on the 4 hour time chart. Make this a little bigger. If we look at things, let's get a better chart here. If we look at this, right, we had this small broadening formation here that we broke out of. Some might call it a flag, right? If we look at, oops. Let's go. Oh, that's not what we want. 4 hour. That's what we want. Here we go. Some could see this as the flag pole. This as the flag, right? We broke out of that. So we don't have any higher lows in this, pop, right? So there's no real trend actually set. We're just had a pop, right? Until we set a higher low, we don't have an uptrend yet. So we've got the gap here, we've got the gap here, and we can go all the way down to basically 42 before we set a lower low. At the same time, if we do go below the 42.04 to make a lower low, it's coming from a higher high, so it's just increasing this broadening formation that it started here. It's not a downtrend at that point, right? So watch for this 1 2 up combo 2 down tomorrow in that first 4 hour candle. If it does do that, stay on your toes, right? Because that could turn into a 1 2 down 2 up for the second 4 hour candle in tomorrow's price action, right? So because that second 4 hour candle of today, or of Monday, depending on when you're watching this, was an inside candle that sets up, if we go 2 down in the first 4 hour of Tuesday, right? That's a 1 2 down, and then that leaves on the table a possible 1 2 down 2 up, right? Gap fill reversal back to the upside, and now we're set that higher low on the 4 hour, and now we actually are in an uptrend. Especially if we break above this level, we've then set a higher low and gone higher high, right, to start a uptrend. Okay, so no trends yet, really, and a pullback isn't the worst thing in the world, right? It could really just be setting a higher low, right? We look at the day chart. I'm gonna clean our chart out here for us. If we look at the day chart, right, we're just still basically in the same range that we've been in since September, October, right? So there's no, we're back in an uptrend just quite yet, maybe on the 1 hour, but from the 4 hour and up, it's more neutral to bullish leaning. If we do go to the let's look at the week first real quick. The reason why I say neutral to bullish, right, we've got this bullish engulfing candle from last week giving us a 3. We've gone 2 up so far. It's a failed 2 up. If we go, what that does is leave a possible 3 2 up 2 down on the table for next week, right? Then we would have our basically like a triple top at that point, right? And then now we're looking at probably going back down to this 27, 26 level, but because that would be the neckline, obviously, of the triple top. But if we break and make a lower high below that level, now we're looking at a bigger retracement of this thin structure retracement, of this thin structure from that April 7th bounce, right? We at least going back to the $22, $21 range to test this gap. And what could be considered, the major support level, right? That would be probably your line in the sand. But, I think we would probably go below that, because if we look at this triple top, right, the magnitude is the range from the top or from the peak to the valley. So, this is $51 to, what's this, $28. So it's $23. 23 from 27. I mean, that would take us all the way back down here and fill all these gaps, right? Do I expect that to happen? No. But if we do break the neckline, that's what is on the table, right? So the first start of the start of that would be making today or this week another failed 2 up, triggering, and then next week triggering a 3, 2 up, 2 down. But again, we're very far from that. And as of right now, you would just call this bullish consolidation, right? The fact that we've made a higher high out of this range, just slightly, but technically have made a higher high, coming from these higher lows in the sequence here. One would tend to think that we should be continuing to the upside, but again, we don't make predictions. We just are ready for price action in both directions. If it goes this way, then we're ready. If it goes the other way, then we're ready. Looking at the month, what we talked about before is November being locked in as a higher low. You can see that here with this red hammer candle, this 2 down, right? That's pushed up, pushed down. We've now gone above that to lock this in as a higher low. We've also gone higher high as well, because we've gone above October's high. So we have started an uptrend on the month. I was hesitant to really call it an uptrend because of this candle here. This was more of a soft higher low, this bullish engulfing candle back in, August. But, now that we've got this locked in as a solid 2 down and we've gone above it, I'm more comfortable with calling this the higher low on the month time frame. And it's important that we establish that, because we're coming from a lower low. That's the crazy downtrend from 2024 into the first half of 2025. So definitely want to see us continue to push upwards on the quarter. Same thing we've been talking about for months now, really. Ever since we went above this 36.15 level, that then triggered the 1 combo 2 down, combo 2 up on the quarter. And again, the magnitude of that move is not the high of the 1, but it's the high of the candle to the left of the 1. So that 70.08 is the level up here. Same thing with the year, right? We're starting it out real well. And not even just starting it out real well. It's what we asked for, essentially, right? So last year's high was 50.76. This year we've already gone above that, and 51.22. And what that does is trigger the see if we can just get a clearer chart here for you. Yeah. So this was 2023. 2024, 2025. So 2025, obviously we triggered this 1, 2 up, 2 down, made a higher low, reversed that, made a green candle. And now that we've gone 2 up on the year, that triggers this 2 down, 2 up, which targets the high of the candle to the left of the 2 down. So once again, that 70.08 should be the target for the year. Will it happen this year? Possibly. Could it take longer? Possibly. The main thing is we need to stay above this 50.76. As long as we're above 50.76, we are in force. So, right, we did pull back a little bit from that today, so we didn't close above it, but we've at least triggered that, and we want to just look for that continued push back up above and remain above that 50.76 level. All right. So that's what we've got from zoomed in view to a zoomed out view. Let's go ahead and dive back in and take a look at what's on the board for tomorrow, Tuesday, January 6th. To do that, I've brought up our scalping chart, and oh man, actually I forgot to move my markers. Beginning of the year. Sorry about that. Let's go ahead and move our markers. So previous high day, we move to Monday's high, the 4-hour trigger to the upside, we will move to the second 4-hour high of the second 4-hour candle of Monday. The trigger to the downside on the 4-hour, we will move to the bottom of the second 4-hour candle, and then we'll activate our previous low a day and move that here, right? Just that easy. So let's go back to the 5-minute. Let's start there like we normally do. And the first things we want to identify are our 4-hour markers, right? So right now, we don't know what the overnight high, overnight low will be. Let's just move that up here, and let's say overnight high, overnight low ends up being there. And do we draw? Oh, let's just say overnight low or overnight high is somewhere around the week print as well, right? So, or the week flip. So what we've got on the board are our 4-hour markers, right? We've got previous high a day up here at 51.22. We've got overnight high at 50.42. We've got overnight low at 48.87 and previous low a day down here at 48.63. Now, if you just reference the beginning of the video, we're just looking for higher lows at or above opening print to get into calls and lower highs at or below opening print to get into puts. So let's just say price opens in the middle of overnight range, right? This price level 1 we'll say is opening price level. If we open and we push up, maybe reject off of last month's high and pull back, but then make a higher low at or above this opening print level, then we want to look to get into calls, and we want to target overnight high and previous high a day. Now, if we open here and we push down, maybe we bounce off of this 78.6 fib of the holiday bull flag, and we push back up, but then we get a rejection or a lower high at or below this opening print level, then we look to get into puts, targeting overnight low and previous low a day. Right now, obviously, if you get to previous high a day or previous low a day, and we're still got momentum and still going in either of those directions, we have triggers and targets that we'll go over here in a minute. But the main thing that we want to drive home for scalping or for early entries into a bigger play, a longer day trade, you want to look for higher lows at or above the opening print to get into calls. You want to look for lower highs at or below opening print to get into puts. That's just all it comes down to. So let's go to the 4-hour and look at things from a little longer day trading perspective, right? I talked about this holiday bull flag, and I'm going to go ahead and draw it on the chart here. We'll take our fib extensions, and we'll use this as the bottom of the flag pole. There's the top of the pole. There's the bottom of the flag. So you can see there's the flag pole going up there, and there's the flag. We have since broken out of that, and we've reached that 100% fib extension. All right, let's go ahead and just change this so it's not blending in with so much other stuff. Okay, there we go. So here's our bull flag, our holiday bull flag, we'll call it, right? Actually, let's change this to 1.236. There we go. So we've got another level here. So if we look at the 4-hour, right, obviously we talked about how we have the 1, 2 up, and then 1, which could turn into a 1, 2 up combo 2 down, meaning the 1 and the first 4-hour candle of Tuesday could combine to make a 2 down, right, going below the low of this 2. If we do that, we're looking at gap fill territory. Well, technically, first it would have to run the strat, right? There's a few cents here between the trigger and the magnitude, but if it reaches magnitude, obviously we got the gap fill. So the 2, 1, 2 down would initialize it. Once we get to that gap, that would trigger the 1, 2 up combo 2 down. And again, the magnitude for a 1, 2 up, 2 down is not the low of the 1, but the low of the candle to the left of the 1. So that would bring the magnitude all the way back down here to 4508. Was it 48? I'm sorry. Yeah, 4508. All right. So we do start breaking down to the downside. That's the ultimate magnitude. Now, we've got some support levels in here, some of which have not been tested. But we've got some support levels that we can kind of start to rely on to probably not reach magnitude on that, right? If we look at the trend that we're in, right, we were going up anyways before this flag, and then we went up again, right? So could we, push down just to make that higher low on the 4-hour, which again, if we go 2 down on the first 4-hour of Tuesday's price action, that then puts on the table a 1, 2 down possibly two up reversal, right? And then again, the magnitude of that move is not the high of the one, but the high of the candle to the left of the one. So again, that's why, I'm feeling pretty neutral myself, and actually ready to take positions on both sides tomorrow, right? If we push two down, I'm definitely going to jump into puts because of what it will trigger on the 4 hour. But if I see it losing steam after the gap fill, which is last week's high, or the 61.8 fib retracement of this bull flag from the holiday, looking for some type of bounce there. Possibility. This 46.79. If you're familiar with this channel, we don't need to talk about how that level has been support and resistance, for months now. Although that 1 2 up 2 down is on the table for the bears, I don't know that it would complete, the magnitude, go to full magnitude, right? I'm just more neutral on that. And I would be looking for a bounce somewhere between, 48 and 47.69, right? That's where my initial would look for. Now, if we break through that 46.79, then obviously we've got the strat magnitude, which is the low of this candle, but there's that gap below that as well. So economic numbers, other catalysts that are still out there this week that could drive us straight back down, which again, we're coming from a higher high, so it's not doing anything but expanding and broadening formation. So it's not the most bearish thing in the world anyway if we were to go fill both of these gaps. I'm probably rambling on about that point too much at this point, but just trying to show that it could go either way tomorrow, right? If we go to the upside in that first 4 hour candle, that gives us a 2-1-2 strat reversal back to the upside, and then we're talking about looking at market makers expected move higher for the week again, right? So it could really go either way. Just want to be prepared for whichever direction it goes. We've got our triggers and targets set, right? Now on the day chart, if we go to the upside, it's just this 2 up continuation, right? And then we're looking at market makers expected move high of 52.25. If you're not familiar with that level, make sure you check out our weekend video. As we always say, that's not an end all be all level. It doesn't mean price has to reject there or even go sideways. We could just blast through it, right? Then we're looking at this 150 fib extension of the April 7th bull flag, right? So did we close at 49.22? Yes. Could we close at 54.42 tomorrow or touch it tomorrow? Yeah. Right. The SOXL can go 20% in a day, especially if they're the right catalysts. And with all of this talk about chip shortage and things of that nature, chips still are remaining strong, while a lot of tech is not necessarily pulling back, but moving sideways, right? So just keep your eye on that. If we go to the downside, right, we've got this gap fill that would be on the board, right? 2 up, 2 down, but the magnitude of that move is the magnitude of the 1 2 up, 2 down on the 4 hour. It's down here at this 48.09, right? Again, though, it could be another gap that we go fill. We've talked about how intraday tops and bottoms of gaps can be bounce points, so we could go and just retest the top of this gap and bounce tomorrow. If we fill this gap, we could just test the top of this gap here and bounce as well. So again, it's just chop. I wish I could give you, say it's going to go this way for this long, look for this price target. We're at the top of a range that we've been in for a while. Perfectly reasonable to think that we could pull back down. We've got gaps below. We could pull back down. At the same time, there's we're pushing, right? And we could have another catalyst to pop us out of this range. So I don't want to sound like I'm going back and forth, but I just want to make sure that you are aware of everything that is possible out there. From the weekly perspective, same type of thing, right? We've pushed up, above last week's high, but all that did is push us to the range that we've been in since October. Also leaves a 3 2 up, possibly 2 down on the table for next week. So when we're at these fringes, we want to kind of wait. If we get that rejection, all right, now we can get into puts, selling calls, looking for the bottom or at least the middle of the range at the very least. This is quite a large range, so I'm not sure that we would go all the way back down to the bottom of the range, but halfway through the range, around last month's 50% level, market makers expected move low, why not? It will close both of these recent gaps as well. right? What it would also do if we go down that low is flip the week, month, quarter, and year red, right? So if we look up at the upper left-hand part of the chart, right now the week is red, but the month, quarter, and year are green. So we're looking for that week to go green so we can have full time frame continuity back to the upside. But if we go down below this 45.13, now we're looking at the total reverse. We're looking at full time frame continuity to the downside, which would play into that possible triple top idea. Just a few other ideas that I've put out there. Again, I don't want to make this video too long, but it's just things that we need to be aware of. So want to continue to see the upward movement, but there is a great possibility that we just go back down. And again, it's not the end of the world if we do. Just play the range. That's what we did back in June through September. It was bouncing between 24 and 28, 23 and 29 basically. And we just played that. Sold calls at the top, bought calls at the bottom, bought puts at the top, and just were able to work it until we broke out, right? So yeah, that's what we've got from the scalping through the week chart. Let's go to the notes here so we can just look at the hard numbers, right? This is for January 6, 2026. That'll be 249 trading days left in 2026. The close price on Monday, January 5th was 49.22. We know that the week has to get back to this back up to this 50.35 to flip back to green. But we know that the month, quarter, and year are all green, and they would have to reach 45.13 to flip red. We know the market makers expected move for this week was $5.01 from the close price on Friday. That gave us a range of 52.25 to 42.23. And then we know where our gaps above and gaps below are. And actually, we need to fill in the gap from today, 48.63 to 48.09. 48.63 to 48.09. There we go. All right, so we know just at a glance where our gaps are at in relation to the price. We talked about on the scalping chart, we want to look for higher lows at or above opening print to get into calls, and we want to look for lower highs at or below opening print to get into puts. From the 4-hour time frame, we looked at to the downside. There is a 2-1-2 down strat available, and if we were to reach magnitude at that, that would also kick off a 1-2 up combo 2 down, right? So 48.74 triggers this 2 up 2-1-2. The magnitude of that move is 48.63, so just 9 cents in that move. But that then triggers a 1-2 up combo 2 down with a magnitude of 45.08. Now, because that's such a large move in the face of the move up that we've made, I've set these levels here as possible bounce points, or essentially levels where the 4-hour can make a higher low. Now, if we go to the upside, right, that gives us a 2-1-2 up, triggering at 49.55, a little bit larger magnitude there, about $2. Magnitude 51.22, and if we really get to rocking, we can hit that 51.91 and that 52.25, which 52.25 is the market maker's expected move for the week. Right, so same type of thing on the day. If we go to the downside, that triggers a 2 up, 2 down, triggers at 48.63, which is the magnitude of this 2-1-2 down. But again, that then falls into that larger move to the downside with the magnitude of 45.08. So I wanted to give these possible bounce points, or possible higher low points as well. Now to the upside, we would have that 2 up continuation triggering at 51.22, having targets at 52.25. That's that market maker's expected move high, and then 53.17. That is a fib extension of the holiday bull flag, right? So those are the levels for short term, anything under a day. The week, we talked about how we triggered this 3-2 up, which is also triggering a 2 down combo 2 up. So it triggered at 48.09. We've already reached the first target of 50.09. Got close to reaching the second target of 51.91, but haven't reached it yet. 52.25 again is that market maker's expected move high for the week, and 53.87 would be our extended target. Now on the month, we know that we have already triggered the 2-1-2 up. Sorry, I didn't have that highlighted. So we almost reached magnitude. We got to 51. We did reach magnitude because we got to 51.11. So that magnitude has been reached, and we're just now looking at these extended targets, right? On the quarter, we're looking for this one combo 2 down, 2 up to continue. Just need to be above 50.76. First target 51.91, and so on, all the way up through this 70.08, which is the actual magnitude for the move, right? We've talked about multiple times over months and months of analysis that doesn't mean it's going to happen in one quarter. Could take 2, 3, 4, but that is the ultimate magnitude, and that's actually quarter one. So for 2026 on the year chart, we need to get above that 50.76. Or we did get above that 50.76 to, oops, that's not what we want to do, to trigger this 2 down, 2 up, like we talked about looking at the chart, and the magnitude of that move is 70.08. You can take the quarter, these intermediate targets we have for the quarter, and basically use them for the year as well. But I didn't want to list a bunch because it's only a $20 move for a full year for SOXL. That's not a lot. If we do make that 70.08, right, obviously we complete that strat, but then we start looking at all-time high of 74.21. Right. So there you go. That's what we've got for our triggers and targets for everything ranging from scalping perspective all the way up through the 1 year chart. Didn't want to take up too much of your time, but tried to jam in as much information as possible. It's the beginning of a new year, so a lot of people are kind of starting fresh after the break, and just wanted to make sure we give a good full breakdown of where we're sitting. Again, neutral, bullish leaning, but could do with a little bit of a pullback and it not hurt anybody. So I hope everybody enjoyed today's video. If you did, go ahead and give it a thumbs up. It's free. The video is free, so all the information we provided was free. And the only thing we ask is that you give us a little thumbs up to help us understand where we're helping people out and where we could do better, right? Leave us a comment. Let us know if we've rambled a little bit too much in a few areas. Let us know if we didn't speak enough in other areas, and we'll be glad to try and do what we can to make the video better for everyone in the future. So again, if you did enjoy the video, go ahead and give us a thumbs up. It really helps us, helps the channel out. Thanks to all those who continue to give us a thumbs up and comment on our videos. Again, we really like the interaction that we have with your subscribers. So we want to just continue that, but we'll go ahead and end the video here today like we normally do. And by saying, if you're watching the video tonight, Friday or Monday night, hope you get some good rest tonight. Wake up refreshed tomorrow morning. If you're watching this Tuesday morning or Tuesday during the day, we hope you got some good rest last night and woke up refreshed this morning. And we look forward to getting out there and trading with you.